Hey guys, welcome back to the channel. Today we're talking about the staggering potential Rolls-Royce stock has over the coming few years and its potential going forward to help the UK economy and itself and its shareholders out because of some significant developments from the company over the last couple of months and recent events in the world as well going forward. If that sounds like something you're interested in today, guys, do please smash that like button, consider subscribing to this channel, and I'll catch you in there and let's take a look. Hey guys, welcome to the landing page for Rolls-Royce stock, Rolls-Royce Holdings, ticker RR. So, as you can see, current share price is 93.43 a share, up 3%. And over the last 5 days, the share price has recovered significantly from 88 pence all the way through to 93 pence. But over the last year or so, and especially since the pandemic, the share price has been absolutely hammered. If we have a look back to where it was once upon a time in 18, you can see that it has been significantly impacted by the global pandemic and recent events in the world as well. Current market cap is 7.8 billion. Its actual revenue is actually higher than that, which is a little unusual, but this is for good reason. Rolls-Royce has been absolutely hammered by airlines having to be grounded through the pandemic. It is also carrying a significant amount of debt, and also it has been going through a transitionary period and had to sell an awful lot of stock to keep itself afloat during the pandemic, which isn't exactly great. Analysts have hammered this one recently, so if we just pop down here, a lot of analysts have it as a sell or an underperform, and at the best it's more like hold, buy, and only 2 have it as a strong buy. The actual average share price and consensus from analysts is £1.21 a share, which is a pretty significant 33% return on where the share price is at the moment, and it is the low end of the estimate currently at 93 pence a share, and it goes all the way through to some analysts have it at £1.77. So there is some significant return in that should that ever come to fruition, but we all know what analysts are like, right? So in 2020 they got absolutely bullied to pieces. Basically, revenue was 11.49 billion, down from 16.59 the year before, and earnings was negative 3.17 billion. So fast forward to the year 2021, the year just gone, they had similar revenue, but they actually made a very, very small profit on that. And then into 2022, the revenue should start to recover a little bit more because Rolls-Royce gets paid. A lot of its money comes from the maintenance and the manufacture of aircraft engines, and if the aircraft aren't flying and there's no demand for said aircraft, then that is why they struggled throughout the pandemic. However, events over in Ukraine and the global pandemic actually slowing down a little bit and holidays opening back up, it can be seen as a little bit of a plus point for this company. Defence sector spending is going to go up, and therefore so will some of the contracts that are going to come Rolls-Royce's way. So, in a quick company overview from 2021, they generated 10.9 billion from civil aerospace there, defence spending, and then power systems. They have an order backlog of over 50.6 billion. That's key to note going forward. That will do the share price some good. You can see how the revenue was broken down there. And then new markets is where we're going to talk about a lot today in terms of electrical battery storage devices. That's massive. Over in power systems as well, and then the development of the SMR, which is the small nuclear reactor that Rolls-Royce is wanting to bring to the space. So you can see the defence sector is mainly hit by the US and UK, but there are export opportunities to Japan, and their power systems are broken down by defence, industrial, marine and power generation. The new markets, as we said, is the Rolls-Royce SMR here and Rolls-Royce Electrical. There is significant potential in both of these markets, especially when it comes to hybrid and nuclear. With the UK lagging a little bit behind the rest of the world now in its nuclear power plants, it's going to want to build some of these and get them on stream incredibly quickly. This is a really good thing to look through the investor presentation. There's an awful lot of information to be had here, and the first power to be generated by the small modular reactors is by 2030. Then we have urban air mobility, these eVTOL aircraft that can take people around towns quite easily and land like a helicopter. That is scheduled to come online pretty quickly soon as well. So as you can see, in terms of what was free cash flow and operating profit, 2021 is a much better year for the company going forward. They have a lot of liquidity still available to weather the storm, but they should start coming out of the other side of that now. And here are the underlying results. So revenue was actually slightly lower than 2020, but gross profit was massively increased, which is obviously a better thing. But they will look to recover their revenue generation further down the line. This is just the relevant revenue by sector, and they have committed 500 million towards the SMR, which is the small modular reactors, mainly in the R&D stage at the moment, but it has received investment from the UK government and others as well. And this is the pathway to rebuilding their balance sheet. Obviously, they have 2.6 billion in cash and 4.5 billion in undrawn committed facilities. That gives them an awful lot of cash. Yes, it's not generated revenue, but a lot of cash to see themselves through the development side of things, and then keeping the business going at the same time while revenue streams recover. And then we can see the way they want to get forward going here, and the 2020 outlook is not absolutely fantastic, but it's definitely generating positive momentum, and they have a strong order book as well. You would expect to see a lot more from different up and coming companies, but this is an established company that does what it does very, very well. Everybody has heard of Rolls-Royce, so you can see the power systems here and the Rolls-Royce SMR side of things here. They secured 500 million in funding to help that out. So this is where the new market's coming from, and this is where the significant growth in the share price will come from. They start to see double-digit growth from that sector. That is where we're going to go at. So what is a small modular reactor? It's basically a baby nuclear power plant that is very easy to build. Will only take about 12 to 18 months to build instead of the 5 years to 10 years that it usually takes a large power plant, and they can power up to 100,000 homes from it. They're going to be low cost. They'll be able to be basically made on a production line and then rolled out to wherever it is that they need to go, which is absolutely brilliant. And this also has significant investment and significant export potential, which is where this significant uptick in the Rolls-Royce share price could come from further down the line. This is a great website to go and look on. Just get on Rolls-Royce's website, type in the SMR, and you'll find out all the information you need. Current shareholders in the project for the SMR are BNF Resources, Rolls-Royce themselves, Constellation, Qatar Investment Society, UKRI Innovate UK, and then partners in the industry. A bit too many of them to read, but you can see them here. And that list is only going to grow and grow over time. So the potential for the SMR going forward is that by 2025, the SMR program will be fully operational and support 40,000 jobs, and potential global demand is scheduled to be between 250 and 400 billion. That is absolutely massive, and obviously a company that's generating just 11 billion a year at the moment, I say just, that's quite a lot of money, but you know what I mean. This could significantly help out that balance sheet big time. And then overall, the program has the potential to generate 52 billion in economic impact to the UK alone. And obviously, revenue from this will positively affect the share price. It's not all sunshine and lollipops though. Cold water was poured on this a little bit by JP Morgan recently, which is why we've seen the share price go down to 88 pence a share, because they think it's going to take a lot longer than Rolls-Royce has been saying, and they might even be loss making or not close to making significant profit into the 2030s, which is probably why the share price is where it's at the moment. But if you've got long-term money available, there are probably better opportunities out there. I will say that you could research into. But if you're happy to just slip a few £100 into this one and then just sit and wait for 10 years, there'll be a great return on your investment as this reactor comes online. The sort of figures they're talking and the amount of export potential that this has and the backing from UK government and industry, it bodes incredibly well for the company. A bit longer term than some people will probably be thinking. A lot of people want to flip their money around quicker than that, but pension funds and the like, this is a really good one to sit on, and that is sort of backed up by the amount of funds held by the mutual funds, should I say. We've got lots of investment companies in here, Fidelity, government pension funds, American funds, Euro Traffic, Vanguard International Stock Market, got institutional investors like Vanguard Group, Hargreaves and Lansdowne, BlackRock, and then we have direct holders that are named just off here, all holding a significant amount of shares, correct up until March the 1st, 2022. So that completes a really good rundown of the company there. Small modular reactors are a significant growth generator for this company going forward. I am sure absolutely that the aircraft and renewing the aircraft Trent engines that they've got will continue to develop massive revenue as well. But this is infinitely scalable as well, to the point where it could generate as much revenue as what comes from the aircraft sector, which would be obviously absolutely massive and do the share price and do the company's balance sheet, revenue, etc., etc., profits, an awful lot of good as well. Well worth looking into. Even if you don't invest, this is significant news for the UK energy mix. Energy mix is massive at the moment because we're all paying an absolute fortune for our electricity, of course. So it's well worth just being abreast of anyway, just to have a look. But I'm very much considering taking a small position in this when I can, just to see the returns that I can garner over the longer term. So there we have it, guys. What do you think of Rolls-Royce? Do let me know in the comments below. I'm aware that it has a high debt level at the moment and revenue hasn't been growing at the moment. This video was more about the future potential coming down the track of the SMR and being able to take advantage of increased defence sector spending, as well as the return to aviation with the end of the global pandemic. If you get in early on this stock at around the 80 pence a share sort of mark, there is a significant 30 to 40% return on you just on it increasing to what the consensus price is for analysts, and then onwards from there, as the SMR starts to come online and the actual potential is realised, then other investors are likely to pile in behind it as well, and that is where your future significant multi-bagging return will likely come from. Thank you very much for watching today, guys. Absolute pleasure as always. Hopefully I'll see you in another investing episode. Catch you later.